REMARKETER. Empowering Realtors.
Good morning, and thank you very much for joining me today. So our discussion is on the financials of your business today. And REMARKETER has got a few tools and a few modules, basically, that you could use to manage your finances and also the transactions that you make for your clients purchasing or buying properties or selling properties. So all that would be sort of included and interconnected with the financial modules, which I will go over today and show you how you can use that. These are some, you might want to say, probably underspoken functions and features of the system that are quite important as well. I mean, if you start using them and if you start really giving the system the input that it requires, it can give you some really good feedback that can be pretty crucial and pretty important in you making the right decisions financially going forward, as well as generating the reports and the insight that you wish to have on your business. At the end of the day, you are a business owner, and as a business owner, it's important to have proper perspective on the financials of your business, and that's what these tools are designed to do. So let's go ahead and take a look at what we have. I'll start from the transaction management. That's where the transactions are going to be recorded, and then I'll get into the other tools that we have. So basically, we'd be looking at the financial analysis. I'm sorry, let me share my screen with you. All right, so we'll be looking at the financial analysis tool right here. We'll be looking at the accounting tool that we have here. And we will also be looking at the transaction management, which is under listing manager and contact manager. So let's start with the accounting modules. I usually like to start with the accounting module, and then we'll move on to the transaction, and then we go on. So I'll show you two separate scenarios. One is when you are selling a property, and another one is if you're acting as a buyer's representative and you're purchasing a property. So the accounting module is basically a ledger that will allow you to record all your income and expenses. Now, this is not an accounting software. It's not going to do your taxes for you, but it's the ledger, which you can then export and import into any accounting software as well. Usually what happens is that you will make an export of this and then provide your accountant with that. So you have all the details available here. So the first thing to remember is that if you keep your ledger up to date, if you keep this tool, if you use this tool and keep your ledger up to date, this is going to save you a lot of time and include all the details that you wish to have for your taxes at the end of the year. So the way that you can export content here is very easy. You can generally export content as PDF or Excel. So that's something that you could do. You can also generate an income statement. So you can see the income statement for the year. So let's say this is my income statement for the year of 2023. So you have all your commissions, the money that you made from commissions, from consultancy, from referrals, from other income. So all of that can be taken into account. And then you have all your expenses, your brokerage fees, your transaction fees, your professional fees, your marketing, licensing, insurance, gas, photography, staging, equipment, referral fees. gifts, entertainment, transportation, and other expenses. And basically, you're going to be able to calculate a net profit. This is the basis for what your accountant is going to be using these numbers for. So you can just easily generate this, print it, and send it out to your accountant. You can also export all the details if you wish, with all the um, income and expenses in the ledger, and send it to your accountant as well. Now, the difference here, and that is for you, is that you not only can save income and expenses into this ledger, but you can also state which client or which property this particular income or expense transaction relates to. So what that will do is that it basically enables you to understand, okay, so let's say you made $20,000 here, but you're going to be able to know that this $20,000 was made selling or buying this specific property. And basically it was in business with this client of yours. So here, for instance, you know that you've made this much in commissions working with this client, but you've also spent this much working with the same client as well. What that will give you is an ROI. So you're going to be able to see a return on this investment, right? This would be your return, and this would be on this investment, particularly with this client, for instance, right? And you can see your ROI on your business in general as well. So this is one transaction, one client, or one transaction. You can see all of these are done on the same property. You could be working with the same client, multiple properties as well. So you're going to be able to have insight on all of these basically perspectives. How much money you've made in general, in total, working with this client, how much money you've spent in total working with this client. So all of that would be available to you. Now, the way that you could use the accounting ledger here is quite easy. All you would need to do is to add records, right? So basically what you do is that you click, whenever an income or expense occurs, what you do is that you just click on add record, and you're going to be able to add the amount in here. So let's say today I've gone out with a client of mine, and I've spent some money. So let's start from scratch. So let's say that I sign a contract today with a new client, brand new client, and I start working with that client. So I want to purchase a property for that client there. So the first thing that I would do is this. I would go to the contact manager, and I would add my contact information in there, right? So let's say I'm working with Jack Jackson. All right. So let's say that's my new client, and I'll be working with that person. I'll put the information in there, Jack Jackson at gmail.com, for instance. All the other information, if you wish to have, you can add them in there. Let's say this is a client of mine and is a buyer right now. All right, so I can just configure that. Let's say I met the person, I got a referral. All right, so that's my situation here. So somebody referred this client to me. And by the way, just in brackets, let's imagine that the person who referred this person to me, if I make a transaction, my deal is that I'll give them a referral fee as well. So we'll include that in our transaction as well. So here it is. I added Mr. Jack Jackson here, and we can now go ahead and get to work. So we get to work. The first thing that we do is that we set up a meeting, and I'm going to meet that person, Mr. Jackson. at a coffee shop to go over the requirements. I get to meet his wife, for instance, and have a discussion, right? So the first thing that I do is that I'll take them on a meeting in that coffee shop, and I pay for the coffee. So let's say we even had lunch together, and I uh, cover the check there. So that definitely is a business expense. So today we've been there, and I spent, let's say, $125. That's our uh, lunch meeting, right? And the category here would be entertainment. All right. So basically, I've taken them out. I've entertained them with the lunch and the coffee and everything. Now, the cool thing here is that I can now go ahead and select the client, right? So we have Jack Jackson. Here it is. So I added the client in there as well. You also can add a related property, but we don't have a related property right now because we haven't purchased anything yet. It's just the client that I'm working with. And at this time, I've spent $125 working with that person. So I'm going to save that, and that's added in here. There it is. I have $125 lunch meeting. It's an entertainment expense, and it's associated with this client of mine. So I already know that if I go to the contact manager and I find Mr. Jackson, this one. When you edit, you're going to be able to go to the accounting tab here, and you can see all the expenses that are related to this person. So you can see that that $125 lunch meeting has been added to this expense right here. Okay, so now let's say we have our discussion, everything is good, and we start going out on showings from tomorrow. So what do we do? I go pick them up. We go out on showings. And one of the expenses that happens there is that I buy coffee every day that we go on showings. I'm spending money on gas, right? So what do? I can there are a ton of apps out there that you can get to calculate your gas expenses. So depending on the number of kilometers that you drive, you're going to be able to select based on the make of your car, you can calculate some expenses, and you can add that in. Unless you're driving a Tesla, which you can still deduct some of your electricity usage when you're driving a Tesla as well. So, but anyways, if you're driving a gas car, which is most probably what you are, what we'll do is that every time that I take them out, at the end of the day, I look at the odometer, and I will see that, for instance, I've driven 100 kilometers there. 100 kilometers, let's say, if my car takes, burns 10 liters, or let's say 20 liters. So that'll be times two, about $40, right? So what I do is that I'm going to add another record here, and the amount is $40. Description is showings. And the category, we've got a gas category available. So you can select gas here. So you know that you've spent $40 in gas, and again, we know it's with the same client. So now I'm recording those as well. So the next day and the next day and the next day. So let's say I'm going to spend $15 on coffee. That's again an entertainment. Jackson. All right, save. So I spent that much too. And then again, I go out on showings. I spent another $45, let's say. Gas. so on and so forth, right? So you start recording these every day, so you know how much money you're spending. Even a $15 coffee will not be missed at the end of the year. These things will add up, and they're important for you to have a record of them, for you to be able to claim against your taxes at the end of the year. And it's an easy, convenient way for you to do this. Excuse me. All right. So you do all of that, and if you're a buyer representative, you might be going out on showings many days, right? So it could be a lot of money spent in here, and you can just record them at the end of every day, and go about your business. So again, let's go back to Contact Manager, and let's check out this guy again. Edit accounting. You can see all of that money is adding up in here, and we know how much money we've spent and how much money uh, is spent for each category here. So I know exactly what's going on so far. All right, let's fast forward and imagine that now I have purchased a property. Okay, so let's go ahead and just select an imaginary property that we might have purchased. Let's imagine I bought this property for them. Okay, so that's a nice property in Newmarket. We go and look at it, and we like it, and we put in our offer, and it's accepted, and we purchased this property for my client. So that's great. All right, so what I need here is the MLS number to add in here. So basically what I'll do is now this. I'll go to Contact Manager, I find my contact, and then I will go ahead and click on Edit. And this time I'll go to the Transactions tool tab here. So when you go to the Transactions tab, this is where you can add a transaction for this person, right? So this is something that a lot of you have asked in the past as well, closing anniversaries and those kind of things. Everything is configured right here, right? So it's automatic. As long as you put in the transaction information in here, everything else will be configured for you, right? So I'll show you what other things would be done here as well. So what I need to do is to add a transaction here. Now I'll go ahead and click on Actions and click on Add New Transaction right here. So I'll be able to add this transaction in. Now you can see that it can take in an MLS number, an address, a city, and then it can take in the information. So whether you sold or leased, how much commissions you've earned, what's the closing date, and what's the transaction type. So these are the important information that I need. So what I'll do is that I'll put in the MLS number. So I'll copy the MLS number. I've purchased this property in here. I can put in an address as well. So I'll just take this. It's a Newmarket. Let's imagine that it was listed for $1.2 million. Let's imagine we purchased it for $1.2 million. Okay. My commissions would be $30,000. I'll put that in here as well. So now I know that I've made a transaction. This is the transaction. This is my commission. That is my earning, right? It's already being added to this client right here. I'll put in the closing date as well. Let's say the closing date is in September 30th. Okay. Now, the closing date is important here. Why? Because of two reasons. Firstly, your commission, your income will not take place until that day. So until the property closes, right? So even if you put in a transaction right now, this does not count as an income until the property has actually closed at that date, right? So we're going to put in the closing date. Now, the other thing is that it's important is this. You will get the closing date added to your calendar as well, which is going to send you that reminder for, following up, for basically closing anniversaries, those kind of things as well. Okay, so that's how this will work. It's automated. You don't need to worry about it. You just need to add in the transaction. What is the transaction type? I've purchased this property, right? So we have purchased this property for this person. All I would need to do is to add in the transaction and save it. Okay, so the transaction has now been saved. Let's refresh this. And I have one property. There it is. The system imported all the information in here. There's one earning that's $30,000. That's the closing date. And we've purchased this property for this person right here. So now I have a total earning of $30,000 here. Okay, so if I go to accounting, you can see that I have a $30,000 income and $225 expense. So now I know exactly, working with this specific client, I have earned how much money, right? And spent how much money on that specific client right there. Okay. Now, let's imagine that I am going to sell this property in the future. So let's say a few years has passed, and now I'm going to work with the same client selling this property. Okay, so what I'll do is that I have this property added to my listing manager. We'll take out the extra one. Okay. Perfect. So let's say I have now listed this property, and it's a few years from now, and we want to sell this property for the same client again. All right. So here's what we're going to do. Again, expenses are going to happen. So I'm going to add expenses as they happen. So I've listed the property. Again, you can have meetings, and you can spend money on coffee and lunch and stuff. So those things can occur as well. But let's imagine that this time I'm going to record all the marketing expenses for this property. So let's say I spent, let's say $150 on basically snacks and drinks that are going to be spent as marketing, right? So these are open house, snacks and drinks. These are marketing expenses. And again, I'm going to select the, same client. Now this time there is a property as well, right? What was the property? 61 Bergen Road. So I'm going to select the property as well from the drop-down menu right here. So now I know that I have a client as well as a property. All right, so this $150 is going to be recorded against the client as well as against this property. Okay, save. Again, let's say I've spent $200 for flyers. That's marketing. same client, same house. Let's say I've spent $300 on Facebook ads. That's marketing. Same client, same house. So on and so forth. So I'm adding all the expenses there until the property sells. Okay. Now let's imagine the property has sold. All right. So what we'll do is that we're going to go to the listing manager. And this property, let's imagine that it's sold. We can mark it as sold. And what I'm going to do, well, it'll be marked as sold anyways. So, but I'm going to click on edit and go to transactions. So here I can record a transaction for the sale of this property. Let's imagine that we sold it at $1.1 million. Okay. Or let's say we sold it at, yeah, whatever. $1.1 million. And my arrangement with them was for me to get $20,000 in commission. All right. The closing date is going to be let's say whatever. And then this one is sold, and the client name is Jack Jackson. All right. So now the transaction has updated. So I know that the property is now sold for this amount, and this is my commission right here. So I have recorded the transaction there. If now I go to the accounting module, you can see that I have made $20,000 on this particular property, and I have spent $650 on this particular property. So I know what is my net income on this particular property. Now let's go ahead and take a look at the contact manager. And I'm going to find the same guy. That's my same client. Let's edit this and go to transactions, because it's the same property and it hasn't actually been sold. That's why you don't see it. But if this was a real example, you would see the two transactions here, and you could see the total income here as well. Now, one of the other thing is that the income that we meant for the sale of the property is sent to the next year. So I don't know why it's not showing it here properly. Let's check out the accounting module. Yeah, that's the problem, because I added the same property with the same MLS number. You see where the problem was? That's why it's overrated. This won't happen, because when I purchase a property and when I sell a property, they're going to be two different MLS numbers, because this one was the same MLS number. That's why the system has overwritten the same record here. It's the same MLS number. But in reality, you won't have the same MLS number, because when you purchase a property, even if you're selling the same property, it'll be a different MLS number down the road in the future. So let's go ahead and just add another property, or let's change the MLS number. So that's why this basically happened here. Here's what I'm going to do. Let me just do a quick trick. Let's see if I can do this. Let's take another one of these. Let's now imagine this is the property. And I'm going to sell this for, let's say, $1.1 million. And my commissions here is, let's say, $15,000. Closing date, whatever. This one is sold. Save it. Now let's go to Contact Manager. Jack Jackson. Edit. There it is. So I have two properties, one sold, one purchased. Now that one was overwritten again, so that's why it was changed to sold. So you remember that. And now I have two transactions with a total earnings of $35,000. And I have the total earnings working with this client, as well as total expenses working with this client as well. So this is how the system will keep track of everything. And then you have everything added to your calendar as well. So you have the closing dates available there so that you can follow up on the closing date. You can send anniversary gifts and postcards at the end. So all of that can happen. So now the aftermath of purchase and sale, you might even be spending some money on the referral fees, on gifts, etc. So you can also add those under accounting as well. And you know that you can add it towards the same client and towards the same property, right? So basically what you'll do is that you can add referral fees. You can, oh, by the way, once you sell the property, you make a commission, right? But you should also add the other expenses as well. We have brokerage fees, we have transaction fees, there could be some professional fees, right? So you might cover some of the expenses for the appraisals, for lawyers' fees, etc. So these would be professional fees. So if you're paying those as well, you should also add them in here as well. So basically what you do is that you add in your total commission. So if you're getting $20,000 commission, you will add that in as your commission, right? But then you're going to add all the deductibles as well. So for instance, if there's going to be a transaction fee paid to your brokerage, that amount would be added in here. So let's say $1,200 is going to be, the brokerage transaction fee, and it happens on the closing date as well. So these transactions happen on that same closing date. So basically, I don't remember when it was, but if it was October, I think it was October 31st or whatever, 28th. So on that closing date, that's there. You can put in the same client again, and the property as well, right? So if that's the property, you can select it and add it in here as well. So basically another $1,200 is a brokerage fee. You also have to spend, let's say you give a $1,000 referral fee, we have that in here as well. What do we have? Communication, referral fee. We have categories for everything in here. Again, Jackson property. So you select all of that and you add them in. So you always go with the gross amounts. All right. So you know exactly how much money you made and how much money you spent, right? Because if you take that $1,200, which is the brokerage transaction fee, and deduct it from the $15,000 that you're getting in here, so that's what they will do, and they will cut you a check, right? And then you just take that amount of the check and you add that in here, then you don't have an ROI on your brokerage. See, that's another thing that you got to have keep tracking as well. So you're going to be able to make your business efficient on two fronts. On the client side, an expenditure that you do on the client side, as well as your brokerage side as well. You can always revisit your deal with your brokerage as well. So these are the different things that you do in your business, and therefore it's important for you to have the costs associated to your brokerage as well. You just don't take the amount of the check that was sent to you and add that in as the income. You add the gross amount of your commission to your as your income, and then you deduct the rest of the deductibles that your brokerage has deducted from your income, because that's your amount of income and these are your expenses. So you need to have expenses in there as well. These will also help you justify your income and tax related expenses as well. So all of that would be taken into account, and you have full visibility both per client and per listing on both items. Now, we also have the financial analysis tool down here. Once you start adding these in from the beginning of the year, you will have all the information available on this tool here, financial analysis, which gives you the perspective on your business. So basically the information that will be given to you here is that, again, this is the beauty of it. All you're doing is adding accounting, the ledger items at the end of every day, or maybe even once a week. So whatever works for you. But the system is keeping track of everything for you. So firstly, this year's income is $65,000. Year-to-date expenses is $3,700, for instance. So that would be your net income before tax this year. So you already have an idea of how much money you're making this year and how much money, because a lot of them would be postponed as well. So because you might be getting paid 3 months from now, 4 months from now, 5 months from now, even sometimes next year, which you're going to be able to see that in here as well. So you have income to receive next year. Sometimes even in the years after, if you're doing pre-construction projects, you might be paid 3 years from now, 4 years from now. So you have all that information available in your system already. So if we fast forward to 2026, January 1st, you already know that you are getting paid for so much amount probably during this year, and that you're going to start adding the other stuff. So you already have a good perspective on what your monetary situation is with your business. You have your income last year so that you can benchmark yourself, and next year as well, so you can prepare yourself. And this is an important item here as well. You have the marketing to income ratio. So what that does is that it takes all the marketing expenses. These are your expenses by category. So your marketing expenses, your business expenses, your commuting expenses, your gifts and entertainment, your communication. So, your cell phone, your internet, those kind of things, and other expenses. So you have all these expenses in here. You have all your income as well. So how much you've sold, how much you've purchased, how much income you made leasing properties, assignment of properties, and pre-sale of properties. So these are all the different types of transactions that you do. And if you do all of these, you can pretty much control and see how much of each you're doing in here. Now, the marketing to income ratio is basically showing you how much of your income you're spending on the marketing. It takes this amount, the marketing, and then it basically divides this by that. So what happens is that you know what is your marketing to income ratio. Now you need to have a healthy marketing to income ratio to be able to maintain your business property. So if you do too little marketing or too much marketing, both are not good. So you should have something between 5 to 10% of your income allocated for marketing of your business. So either marketing of the properties that you're selling, so things like, open house, um, uh, compliments, for instance, or uh, flyers and brochures and signs and those kind of things. The rest of it should be marketing your business. So your own Google ads and your own Facebook ads, or your own Facebook campaigns, or Instagram posts and stuff like that. So you're spending money on that as well, not specifically on transactions and clients, but also on your own business as well. So all of those would be taken into account, and you're going to be able to see a marketing to income ratio. And if you have a healthy ratio of marketing, I mean, if you're spending 50% of your income on marketing, that's not healthy. And if you're spending just 1% of your income on marketing, that's not healthy either. So you should be able to find and come to, and you can talk to your uh, consultants, your broker of record, whoever is helping you with the growth of your business. What would that amount be at the stage of your career? And you're going to be able to maintain that within that as well. And then finally, you're going to be able to see all your income and expenses displayed here. So you can see how much income you have in the different months of the year, and how much your expenses look like in the different months of the year. Obviously, this is a dummy account, and you don't have stuff are just going up and down and all, quite extreme ends, but yours should basically be a chart which explains everything to you. You then have the client by income by client. So you have all your clients with which you have had income with, and basically they are here. So basically, Jack Jackson is one of your clients here, which you've made $37,075 in total working with. So you would know who are your highest money-making clients, etc. You also get referrals as well, right? So how many referrals by clients you've got, right? So you've got two referrals here, two referrals there. So those are your referrals too. So you have all that information available at your financial analysis tab, which can give you a great insight onto your business. So keeping a record here under accounting and adding these modules, these transactions, is also going to help you have all of that insight, as I showed you, on your business as well. To make things easy for you, if you have the REMARKETER app, you are going to be able to, here it is, under the REMARKETER app. Let me just reduce this for you so you can see we do have an accounting tab here as well, which is pretty easy. All you need to do is, you have the same information here as well. All you need to do is to click this plus sign at the bottom and add your transaction here as well. So it's on your cell phone. So exactly at the same time that you pay for that coffee, you can just pull up this app, add this in, and go about your business. So you have it available, and it's on your cell phone, and you can just quickly add your expenses in there. And whenever income happens, quickly add your income in there, and then you have the perspective that you want as a business owner on your business. All right. So let me check to see if we have any questions. There don't seem to be any questions. That's fine. I hope this was clear. If any questions come up, certainly go ahead and send it to us, service@remarketer.ca. Other than that, go ahead and try these features out. I'm sure it's going to be beneficial to you when the need arises. Thank you again for being with me. Uh, we'd be looking forward to hearing from you. Any questions, any suggestions. And again, as always, I'll see you again next week, same time, same place. Take care.